Lethal Weapon, Braveheart, Mad Max. Mel Gibson does not seem like the kind of guy that would be scared of the IRS. But that doesn't mean he doesn't still have a good tax plan for his international investments. In this video, I'm going to tell you what I would do if I was Mel Gibson's accountant. So I did some research online and I found some specific international investments that Mel Gibson had. We're going to hit each one individually and talk through the international implications of those investments, and then ultimately what I would be doing from a tax planning perspective if I was his accountant. So one of the first things that surprised me when researching some of Mel Gibson's background is that he's actually a dual citizen, an Australian citizen. He grew up in New York in the US, and he's also a US citizen, but he's an Australian citizen and apparently spent some time there as well in his early years. That's a very common question I get from people is, let's say you're a US citizen and you move to Australia, or you're moving to France or anywhere in particular, and a lot of clients will tell me, oh, but I'm also a French citizen, or I'm also an Australian citizen. It's actually a pretty easy answer for me because it really is irrelevant at the end of the day, because the IRS taxes you based on your US citizenship. They don't care at all where else you happen to be a citizen. And actually, it's pretty similar on the other side. In Australia, for example, they tax you based on your residency, but I say it's similar because they also don't really care about your citizenship. They care about where you're actually living. So if you're a US citizen living in Australia, you're going to be also an Australian tax resident. So now you're paying tax in both places, and the US has to give a credit for Australia, at least on the Australian source income. On the other way around, it's actually the same thing. If you're a dual citizen and you live in the US, now Australia doesn't even care about you because you're not an Australian tax resident. So you're not going to be taxed at all in Australia, except for maybe on some Australian source income that you still have. So from that perspective, if you're like Mel Gibson and you're a dual citizen in different countries, the US doesn't really care and the foreign country doesn't really care. The US doesn't really care because they're going to tax you based on your US citizenship regardless of where else you're a citizen, and the foreign country is generally going to tax you based on where you're living. The other thing I found online is that Mel Gibson has foreign or non-US property ownership. In particular, I spend a lot of time in Costa Rica, and I'm personally familiar with the property that he has in the Nicoya Peninsula. So he owns about 400 acres of land in the Nicoya Peninsula in Guanacaste, where he has multiple houses throughout the property. He actually listed that a few years ago for close to $30 million and nobody bid on it. So right now he still owns that property, and most likely he owns that property through a foreign company and maybe even through a trust structure. So in that type of situation, of course, I don't know exactly how he structured that foreign investment, but some things to look into, especially if you're a high profile person like Mel Gibson obviously is that there's a couple different ways you want to structure that. And I have a lot of videos out there on structuring foreign real estate, but in particular, if you're liking this video, you should really check out my newsletter where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. You're likely going to want to have a foreign company, like a foreign version of an LLC, if nothing else for limited liability purposes in that jurisdiction. On top of that, I often suggest people to set up a foreign trust. So in Costa Rica, they have the foundation, or maybe in Panama, they have very easy to access foundational trust structures that you can set up. And that can help specifically with privacy situations. So with these foreign trust structures, people can't just look through that and see who the owner is necessarily. And in those cases, I don't claim to be, and I'm not a lawyer in any other country, I don't claim to be an expert in other countries' tax systems or law. So what I'm doing in a case like that is I'm connecting that client to specialists that I know in either Panama or Costa Rica or whatever country. In this case, we're talking about Costa Rica. So I'm connecting them with specialists there to set up the right company, the right trust structure, so that we're limiting liability, limiting privacy, and also limiting the taxation in that country. And then also on the US side, I imagine Mel Gibson is looking out for his estate plan as well, because even at the 13 million that the US is at now for the estate tax exemption, that property alone is well over that 13 million. So he's definitely over that, and he has to have certain estate plans in place so that he's not subjecting his overall assets to that 40% estate tax that could be there. So what we're going to do is in the US, on the top side of that structure, we're going to make sure we want to have at least a trust in the US, if not also an LLC, because the trust at the US level is going to give some flexibility as to where those assets go after the fact. And then after that, that's also going to limit what lands in his estate at the end of the day. So I'm not an attorney, so I'm connecting people like that to my US tax people that are going to set up trusts and estates to make sure we're avoiding that 40% estate tax. So those are the things to be looking out for that I would be looking into with respect to this Costa Rican property ownership if I was Mel Gibson's accountant. And also some of the things that you as a regular person would want to look into as well if you're investing outside the US in foreign properties. The last thing I came across with Mel Gibson that I thought was interesting, would have an international impact, is he went on the Joe Rogan podcast not too long ago and talked about potentially moving down to Costa Rica. At least in the recent past, he's been living in Malibu at a very nice house there. And then when the fires happened in January of 2025, his entire home really burned to the ground as far as I was able to understand, like a lot of homes there, and it was very sad. And he came in the Joe Rogan podcast and basically he asked him what he was going to do now that his house was destroyed. Where's he going to live? I'm sure Joe Rogan tried to get him to Austin, Texas, like he seems to do with a lot of the other celebrities. But Mel Gibson said that he really wanted to, I forget how exactly he put it, but he mentioned maybe the possibility of moving to his place in Costa Rica. So if he was to actually move to Costa Rica, that would offer an interesting tax angle for him because now he's situated in a tax resident in that country. Costa Rica is actually one of those countries though, that's a territorial tax country, meaning that you're only going to pay tax in Costa Rica on the income you earn there. So if Mel Gibson was to move to Costa Rica and he's still earning the same type of income, so he's getting royalties from movies, director's fees, I'm sure he has passive income that's coming from investments outside of Costa Rica, none of that would be taxable in Costa Rica. To the extent he actually does earn income in Costa Rica, and if it is taxable there, he's going to be getting a foreign tax credit in the US on that Costa Rican source income. Because like we mentioned, US has a citizenship-based taxation model, so he's still going to pay tax in the US on that income. So I'm not sure if he was serious or if he's really going to move to Costa Rica, but if he does move to Costa Rica, there's definitely some planning we can look into, in particular the foreign earned income exclusion. Now with Mel Gibson's income, $130,000 exclusion is really a drop in the bucket and probably not the biggest lever we have from a tax planning perspective, but it's definitely one I'd be looking at for us normal human Americans out there. But so that's basically what we know, or at least what I was able to figure out from Mel Gibson's international dealings. You know, he's a dual citizen. He has foreign properties in different places. He's thinking about potentially moving to Costa Rica. So from that perspective, it's very much like a client that I work with every day. And we just want to make sure that A, the assets are protected. He has liability protection, that you're not paying taxes twice on the same income in two locations. So we're getting benefits of the foreign tax credit if that's available. And we're taking advantage of things like the foreign earned income exclusion if we do move outside the jurisdiction, so that you're not paying tax in the local jurisdiction, particularly if it's a territorial tax system, and you're getting the benefit of the foreign earned income exclusion, which excludes you from taxation altogether on that type of income. I know we're not all Mel Gibson, and all don't own $30 million properties in Costa Rica, but these same tax planning ideas really apply to everyone out there that's thinking of doing something internationally. If you have questions about an international investment, an international move, reach out to us at McGowanTax.com, book a consultation with me, and we'll get a plan that's personalized for your situation.